Hi all, Joshua Steger here from etfadvisor.com.au, and today we've got a subscriber question. It's from Eric, and he says, I like the look of the Indian market, but how do I choose which ETF to invest in? And it's a really good question because there are multiple ETFs in the Indian market or for the Indian market listed on the ASX. So I'll show you how I analyze those ETFs and give you an idea of how to make that choice, how to choose the ETF that's going to suit your needs to get access to the Indian market. So it's quite topical at the moment that Eric asked that question because we quite like the look of the Indian markets. We know it was one of the best performing markets out of COVID, and then we've had a basically 17% correction from the highs. And why it's looking really interesting here is we've got this base. So you can see that was the tariff news, and India, I think, was one of the quickest markets to rally straight back up. You can kind of see, so just in terms of the base pattern, you can see kind of all the red selling is all on this side, and basically at the bottom of the base, you're starting to get more green. I mean, there's a bit of red here, but it was kind of drifting up. So it does look really constructive, and it's really close to that point where it's may well break out and start trending, and that's pretty crucial there for the way we look at investments, because we want our investments not to be in bases. It's not to be sitting in this structure. We want most of our money, if we can, get into ETFs that are starting to trend. So this is right on that cusp. So it's really quite an important question, quite timely for the moment. So let's have a quick look at the ETFs available. So this is the report from the ASX covering ETFs, and I think the main things you want to look at initially are probably the fees. So you've got FIIN here, that's probably the most expensive at 1.2%. Then you've got IIND at 0.8. You've got NDIA at 0.69, and then GRIN, which is the new one, and it's actually listed in a different section. Here we are, GRIN at 0.75. So there's one that's kind of an outlier there in terms of being over 1%, and all the others are under 1%. So that's something to keep in mind. The next thing you want to look at are pretty much the chart. So you want to look at a chart because it's going to tell you so much about where your stock is or where your ETF is within its investment cycle. So we've got the 4 ETFs listed here, and we can pull back to say 3 years, apart from the fact that GRIN was only listed very recently, so we don't have that kind of data. But you can see NDIA, IIND are certainly tracking the performance of the Indian markets. You can see that rally, you can see the pullback, and you can see that point where it's looking to want to break out. FIIN is a bit different there in that regard, so it's probably not looking as strong and a little bit more sporadic in the way it trades. So it's probably just down to the fact that it's a little bit newer. And GRIN as well, I mean, it's definitely the newest, but it did hit that all-time high a couple of days ago and pull back in a little bit. So yeah, I mean, they're all kind of tracking what we want to see in terms of the Indian market. So it's not giving us a lot of information. I mean, in general, if you want exposure to the Indian market, you want to buy the ETF. For my mind, you want to buy the ETF that's moving into new highs first, and that was probably GRIN. It's pulled back a little bit here, but if it does start to move out, that's going to give me a bit more of an indication that that's where I want to be. But let's delve a little bit deeper still into these 4 ETFs. And one way to do that is, so we can go on their website and just see firstly what their mandate is. So this is NDIA, and its mandate's basically to invest in 50 of the largest companies in India. So you can kind of scroll down and you can see what their holdings are. So what I'll actually do is analyze those holdings and just see once again whether those stocks are in bases or uptrends, or even worse yet, if they're in downtrends. But if we can get most of those stocks looking quite positive, trending up, then that's once again a positive sign for that ETF. If we look at IIND here, I'll just so the mandate of this is to get a diversified portfolio of the highest quality Indian companies. So that wants to buy the 30 highest quality Indian companies, and using key factors such as high profitability, low leverage, and high earning stability. So you're going to see the holdings here again, and I will be looking at analysing them just on the charts as well. So here's FIIN, so this is Fidelity India, and this is an active ETF. That's why it's 1.2%. You've got, looks like you've got a fund manager in there that's helping to select the stocks, and they're looking for bottom-up stock selection process, high quality companies, 40 to 60 Indian companies, and they're doing detailed research to make their decisions. So just in terms of holdings, once again, yeah, I mean, there's the mix, and I'll delve into, I've preloaded their top 10 holdings, and we'll dig into them as well, but you can see a lot of banks there as well. There's GRIN as well, so this is the newer one. This is Van Eck India Growth Leaders ETF. So generally when a market's running, you probably want the highest growth kind of mandate, because that's generally, you know, when things are positive, it's all growing, it's all momentum, that's where the action's going to be. So GRIN is looking at fundamentally sound companies in India with growth at a reasonable price attributes. So you basically, they're trying to buy high growth companies at good prices. They don't want to pay too much. And they're going to get 50 Indian equities. So it's, once again, really diverse. Have a look at the holdings, and I've preloaded the holdings once again into the TradingView system, and I'm just going to dig through them quickly just to see, as I said, are they in a base, are they uptrending, or worse yet, are they downtrending, and what's the general feel of them all. So that's the 4 ETFs, a quick rundown of their mandates. Now let's delve into the individual stocks. So here we've got NDIA. So this is the one from Global X, and you can see the stocks. So here we'll start with, so they've got HDFC Bank, and you can see that actually looks quite constructive in terms of, it looks quite a lot like the Indian index, but it's actually up near highs, so that's really positive. Looks like it's come out of this base here, and it's just looking to, you know, build a bit of energy to make the next move. ICI Bank, much the same, actually moving into new all-time highs, so that's positive. Reliance, very close to all-time highs, looks really constructive, much like the other two. Infosys, not as good. You can see that's definitely downtrending, not anywhere near highs. It's got a lot of work to do, so that's probably not the greatest holding there. Bharti Airtel, so once again, very close to all-time highs, really constructive here. Obviously broke out, just consolidating. So yeah, if we do get a push in the Indian market, that's probably going to move. Larsen and Toubro, so this is industrial services, engineering and construction. So once again, it's a little below all-time highs, but this is looking quite constructive. It's not far off all-time highs, so if it does start to push, that looks quite good as well. ITC, so this is a tobacco company. Probably, yeah, it's probably still in a bit of a base, so not as good as the others. Tata Consultancy Services, so this is an IT services company. Looks, you know, probably one of the weakest of their holdings, and certainly not even in really a base at the moment. It's probably more in a downtrend. Axis Bank, so once again one of the banks, looking really good, looking strong, very close to all-time highs. Kotak Bank did recently reach all-time highs, has pulled back in a little bit, but that looks really constructive. And that's the top 10 for NDIA. So you could see, you know, that certainly the banks, those bank exposures look really good. Now we'll have a look at IIND. So this is Betashares India ETF, and you'll see they've got many of the same holdings. So here we've got Infosys, which we said was in a downtrend, really not looking too good. That's their largest holding. ICICI Bank at all-time highs. Great news, very good. Kotak Bank, which we saw, Kotak Bank, which we saw in the previous NDIA holdings, so has reached all-time highs and pulled back in a little bit. Axis Bank, very close to all-time highs. HDFC Bank near all-time highs. TCS, so they got Tata Consultancy as well, more in a downtrend, not great. But this is a different one, Bharat Electronics, all-time highs, and seems to be firing, so that's aerospace and defence sector, so that's the reason why, but really strong, so that's a good holding. Mahindra and Mahindra, which is motor vehicles, probably, so this is probably more in a bit of a base at the moment, little bit volatile, feels like it needs a bit more time, but close to all-time highs, so that's quite a positive. Hindustan Unilever, this is probably, yeah, I mean, this is definitely in a base, needs to do a bit of work, so a bit of a nothing, that one. And then Hindustan Aeronautics, once again in that defence space, all-time highs, really strong, so that's a good holding. Now we'll look at Fidelity India, so this is kind of the more active ETF, so I'll be really interested to see what holdings they've got. So once again, quite similar. So here we've got HDFC Bank near all-time highs, as I said, we quite like that. ICI, all-time highs, banks, place to be in India at the moment, it seems. Infosys, we don't like, downtrending. Axis Bank, near all-time highs, looks really good. HCL Technologies, so this is an IT services company. Probably, you know, it feels like it's bottomed, but it's got a lot of work to do. There's the overhead resistance, so probably, you know, not pretty average, that one at the moment. Fortis Healthcare looks interesting in a base. If the market starts running, it probably needs another contraction, but that looks like that could move into new all-time highs as well. Maruti Suzuki, so motor vehicles, near all-time highs, a little bit, you know, V-shaped in terms of there's the previous high, it's come back down, back up, feels like it needs more time, but very close to all-time highs, so that's positive. Bharti Airtel, so this is telecommunications, near all-time highs, that looks really good. Godrej Consumer Products, so this is household and personal care. Yeah, I mean, it's in a base. There's, you know, the previous highs is kind of up here, but that does look constructive. It's chopping around, you know, definitely doing the work, and you can see, you know, those green bars starting to pick up. Yeah, you've had earnings as well, so that looks quite positive as well. Havels, so this is electrical products, quite far below the all-time high there, but still, yeah, in a base, so that's a bit average at the moment. Needs to do a lot of work. So that's the holdings for Fidelity India. So once again, the banks, kind of the place to be for the Indian market at the moment. And then we'll have GRIN as our final analysis, GRIN ETF. So this is going to be a little bit different. So this is kind of growth companies, seems to be a bit more, yeah, a bit more different in terms of the holdings they've got. But let's have a quick look. Zen Technologies, so this is IT. Looks quite a lot thinner in terms of the way it trades. There's the previous high. It's in a base, bit more work to do till it can get back up there, but had earnings seems to be responded to pretty positively. Artham Invest in Infrastructure, so this looks maybe like an investment company. All-time highs, great news. Mazagon Dock Shipbuilding, so all-time highs, looks really strong. Different holding to the other ETFs. Force Motors, all-time highs, looks really strong, motor vehicles. Hindustan Aeronautics, so I think we've seen this one already, defence space, all-time highs, looks really strong. Angel One, investment banks and brokers, probably, yes, still in a base, got a bit of work to do. There's the previous all-time highs, got to get out of here, but yeah, it looks pretty positive. Wari Energies, so this is in a bit of a base, this is semiconductors, more work to do, but an interesting holding, one we haven't seen in the other ETFs. Nippon Liam, so this is investment managers, that actually looks like quite a constructive base. It's working its way up the right side, had earnings here, and looks to be those green bars starting to pick up, so looks to be some buying there. I think if the Indian market pushed, this would push out. Here we've got Bharat Electronics. So this is aerospace and defence, all-time highs, so that's really strong. And then we've got Motilal Oswal, which is a internet and software services. So this is in a base. Bit of work to do to get up to those previous all-time highs, but it's doing the work, and probably, yeah, if the Indian market does get a bit of a move behind it, that'll get going. And Jupiter Wagons, so it looks like trucks, construction, farm machinery. This is probably one of the worst holdings just in terms of the chart. In a base, there's the all-time highs. Just looks like it needs to do a lot more work to get out. IDBI banks, the banks, again, not all-time highs, but it's definitely broken out, because you can see on the weekly the all-time highs were back in July. But there's your base. There's, you know, the work it had to do to get out. There's your earnings, and it's pushed out good volume the last few days, so that's a positive sign. So that's the holdings for all those ETFs. And I think just in terms of judging them, you're looking at NDIA and IIND have quite similar holdings, and Fidelity also has that big exposure to banks. But GRIN looks quite interesting, so it's quite different in terms of the stocks that they hold, and that's probably reflective in the action in terms of these charts. So there's NDIA, IIND, pretty similar kind of charts. I mean, this NDIA is closer to all-time highs. It looks like it's in the base. This looks like it needs a bit more work to do. And as I said, GRIN did break out to all-time highs, settled back in, and FIIN, Fidelity, still in a bit of a base as well. So just judging by the charts and the cost, the MER and the holdings, you may want to choose two. I mean, I think, and I basically, as I said, I want to buy the ETF that's going to move out into new highs sooner. So NDIA looks like that could be the one, and GRIN as well looks quite constructive there as well. As I said, it did move out to all-time highs the other day, has settled back in, but if that starts to move, yeah, they're probably, you know, to get a good mix, I'd probably play those two. Saying that, if India quickly turned around and moved up into new highs, that would be worth a look. Same with FIIN, but just remember you're going to pay a higher fee on that one because it's more actively managed. So just going back to looking at the Nifty 50, which is basically the Indian index, and you can see, yeah, I mean, that looks really constructive, and this is just today, the bar today, it's almost looking to go out of this little range. So really topical question. I hope, you know, that gave you a bit of a rundown as to how I analyze ETFs. I mean, they're not all going to be the same. There are little nuances, and I think, you know, if you can understand that, you can add a lot of value to your portfolio. So I hope that's helped you guys, and watch out for the next installment. I'll be doing quite a few of these videos over the coming days and weeks.